All right, Ekta, thanks so much for running us through those numbers. But let's get chatting about another stock, that's Bajaj Electricals. The numbers look quite good. We're joined currently by Mr. Shekhar Bajaj, the CMD of the company. Hi, Mr. Bajaj. Thanks so much for joining in. Things looking quite good in your EPC business. Pleasant surprise coming in there. You delivered a profit this time around. What's the outlook there? Are you looking at sustaining this kind of a performance? And also your lighting business, good operating performance over there. We saw a growth of around 26% as well as margins expanding over there. What's the outlook on both these two positive sectors?
I think both these sectors will continue to do well because the business of LED for lighting is going up and we've got enough orders in hand, and therefore the fourth quarter also should be very strong. And the margin LED is reasonably good, so overall I think our fourth quarter should be also good both in terms of growth and profits. EPC also we've got orders about 2900 crores still in hand, and therefore I think fourth quarter also should be strong, and which I had earlier mentioned that we now don't have any other legacy projects and legacy problems, so therefore it is clearly going to keep improving quarter to quarter. The other aspect which is important to understand is that in the third quarter was the last time that we had to make any provision. From next quarter there will be no further provision, so this type of unusual conversion from a minus 60 crores to plus 47 crores for the quarter, and from a minus 70 crores to plus 100 crores for the 9 months is something because there were major provisions which were made in the third quarter, which is not going to be made. So fourth quarter, whatever is going to be the results will be a comparable quarter to quarter rather than having these extra provisions which were made in the first 9 months of the year.
Okay, sir, take your point. So next quarter expecting a bigger bump up on the bottom line then, because you won't have some of those extraordinary provisions. But could you throw some more color on the consumer business, because that's the lion's share of revenue, and what the outlook is? I mean, the third quarter typically you get a bit of that festive sales advantage as well. But what is the outlook, and what is a sustainable revenue growth rate that you're expecting as we look at the next financial?
See, as far as consumer durable is concerned, like we did in the previous 3 years, we were trying to clean up the whole system of EPC, and therefore you are seeing the benefits coming in the last 3 quarters. Similarly, in consumer durable, clearly we are doing the secondary sale rollout. We are doing what we call as RREP, or that is to do secondary sales. So because of that, we are reducing the inventory levels at the dealers outlet. We are stopping wholesaling, and because of that there is a certain amount of degrowth which is taking place in some of the areas, and therefore overall it is showing a 1% net negative for the first 9 months. From the fourth quarter you see positive numbers coming, and next year you can clearly see a double-digit growth coming in consumer durable. Also, if you look at margins, our first level margins in consumer durable has not come down, but because our sales growth has not taken place, and therefore the fixed cost divided in a smaller volume is resulting in 2 to 2.5% extra fixed cost burden, and therefore the margins are showing lower. But the first level margins in even consumer durable has not gone down. In other two, of course, has gone up substantially, from a 15% to 30% in the case of EPC, and from 20 to 22% in the case of lighting. So the improvement is substantial in both those, which will continue, and consumer durable fourth quarter there should be positive numbers, and next year clearly I see a double-digit growth in consumer durable, and the margins are not under pressure.
All right, Mr. Bajaj, you had given us a revenue guidance of close to around 5,000 crores for FY16. Are you looking to up that particular number, or do you believe we'll end the year with 5,000 crores? And also give us a sense of your order book, your E&P order book. It was hovering around the 3,200 mark. What's the update there?
Number one is that I don't think we are going to reach 5,000 because our consumer durable is not showing the required growth. So therefore I think we should be around 4,700 crores. This is what I now feel looking at the numbers, and we are not going to do any extra pushing because we have introduced certain disciplines which we would like to continue so that we have a bottom line orientation rather than the top line, so we should around 4700 crores is what now I would look at a realistic figure. And the second point which you were mentioning was on the area of questions.
Yeah, the
One was
order book, ENP order book.
Yeah, order book is 2900 crores, of which 750 crores is of TLT, around 1900 crores is of power distribution, about 200 crores is of illumination, which is high mast and special projects.
Right, so no fresh orders.
So 2900 crores, that's why. No, we've billed a substantial amount, so therefore we keep getting fresh orders, we keep billing. But and also we are wanting to do proper execution, so we are not going haywire trying to take orders, and therefore to that extent we want to do the execution. It had gone to 3200, now it's at still 2900, so we got orders for about 300 crores, we've done billing of 600 crores. We want the order book to come down, we don't want the order book to come up unnecessary, because we have to do execution on time, we don't want to delay it.
All right, Mr. Bajaj, good luck with those plans. We leave it on that note for this quarter. Thanks for joining in. We've got a couple of decent earnings in the last few minutes. There was, of course, NHPC, and then there is Hotel Leela, one-time gain coming in, helping the bottom line. We've finally seen the company come back in black as opposed to that big loss of 125 crore rupees. Can't say the same for the market, however. The market's still struggling, and how we're still hovering around that 7200 level, despite European markets actually trading pretty well right now for the time being.
That's right. So if we just take a look at it, some of those stocks are trying to put in a bit of a fight. So you pull up BPCL, that stock in the last 10 minutes has spiked up close to around 1.5%. So let's get that one up for you. And a couple of big boys, I think ICICI Bank as well has cut its losses. It was down close to around 2.5 to around 3%. That's BPCL, that's up for you. Tata Steel as well has cut its losses. So a couple of these stocks, they're trying to fight for the Nifty, and that's why it's recovered close to around 20-25 points from the low point of the day. Keep your eye out. Maybe in fact there is some short covering as well that's taking place. Slip into a short break, come back, we'll try to answer some of your queries, focus on the markets as well. Stay tuned.